Hey, welcome everybody to our latest episode of Hung Chin Hon Sweatin' Money. We may or may not have ownership or other positions in the stocks mentioned on the show. Don't buy stocks based solely off what you hear from this podcast, and always do your own homework and research before investing in stocks. And of course, I'm your host, Kong, along with your co-host, Gibson.
Oh, it's great to be here.
So, well, actually, before we get into the news, let's get to some. Let's talk about this thing we were just talking about just now, just to get it off your chest.
Talking about the betting thing on
the
game?
betting thing.
Oh no, it's just a virtual currency thing. I just didn't feel. All right, the same way I feel about stocks is the same way I feel about like my own personal betting. Is that if I feel like I have a strong confidence and reason to be in it, I'm going to bet on it. But sometimes, you don't feel like, on betting on something. It's the same reason why we advise our viewers to basically do their own homework. You don't feel comfortable with the bet, and then you go ahead and someone else says, no, you need to bet on this. I need to go ahead and do it, and then you lose. You're like, oh, just leave a nasty taste in your mouth, That's roughly what it is. It's just the same thing as gambling advice, but what can you do?
So if anyone ever tells you to buy stocks and then you just don't feel right about it, don't do it.
Just don't do it. Just you have to understand that at the end of the day, it's your money, it's your loss, so it's also your responsibility.
Now, if the stock does actually, make some gains, then hey, that's different. But oh well.
Exactly. Then sigh of relief, really. Because until then, you're just staring at it, going, "Oh my God, are we gonna make a profit? Am I gonna lose money?" Question mark. ... Hope.
All right, so let's get into the news then. Toyota has issued its lowest rates for corporate bonds at a low rate of 0.001%. And no, it's not because it's that stable of a country of a company. It's actually because the Japanese government's policies of negative rates, which have removed most discounts that the automakers actually used to sell, or like you give away these, or I guess the whatever discounts you used to be able to buy these bonds at, no longer there. So, aside from that, now this is why Hideo Shiozumi, a fund manager working for George Soros, hasn't invested in Japanese exporters for years. Granted, Toyota has been one of the most successful in the auto industry and has outperformed others in their league in the U.S., but Mr. Shiozumi invests in Japan's biotech and e-commerce platforms.
Great. I was just thinking about it. I'm like, if I was a Japanese person, would negative interest rates mean that I'm probably not going to leave in the bank. So does that mean I'm going to just shove it into a mattress? Well, that's ludicrous, because then that's just asking for home burglary and so on. Yeah. So I guess, that kind of forces, Japanese citizens to kind of just, buy like foreign stocks or whatnot, or, an American T-bill, Treasury bill. Might kind of force him to buy like foreign governments, bonds, etc. Just to, because then you can't even safely put your money anywhere anymore.
Right. Well, I mean, I guess what you could do is actually, what other investors are doing, and invest their money into the yen, and then like just completely inflate it. But then that would completely throw off Abenomics.
Nice.
But anyways, yeah. So now. That being the case, Line, the chat app, doesn't directly invest in the e-commerce platform, but it's definitely benefiting from branching out and partnering with companies that actually are involved with this sort of thing. Plus, unlike the balance sheets of Twitter, Line is actually profitable. So will you buy some shares of this company, or will you short it, considering the IPOs of most tech companies recently? A perfect example of this is Facebook, whose value dropped at half of the initial IPO at one point.
I don't know. If they say it's profitable, then it's...
Facebook was profitable when it went public.
I don't know. Actually, well, yeah, I guess so. With Line, it says it's profitable, but I like to wait and see on the stock to see if it lives up to investors' expectations. I don't know how much profit it is in. Right. And then I think I'll wait like a few quarters after the IPO to actually invest in Line.
How long again did it take Facebook's stock to actually come back up again?
Not very long. It was actually pretty quick. It was a short period of time.
But I think it was a little bit more than 1 quarter though, right?
Yeah, I think so. It went from like $90 to like $20.
Yeah.
It opened at, I think, roughly $90 and then dropped to $20 and then
Yeah,
still
way
recovering
more
from
than
that.
half the amount that.
Yeah. I think it's partly due to Zynga not doing as well, you know.
Right. Yeah.
And then they're like, "Whoa, the Zynga's not doing well. How is Facebook gonna monetize?" And then a lot of and then when they first released, GM wasn't too happy with the advertising campaign, and then the chief operating officer, Sherry, whatever her name is,
Sheryl Sandberg, I think.
Yeah, Sandberg. Yeah. So she came out and said that, you know, online clicks don't matter. It's impressions matter, and this is like the industry had uproar over it just because like this is the exact reverse in the all online industry. Is the reason why it's like, oh, well, you're tired of the TV impressions and the movie theater impressions, billboard impressions not meaning anything because you don't know if it has a tangible effect on your business. Well, welcome to the internet. We have clicks. There's click tracking. You could tell if it has an impact. We could follow the click all the way until there's conversion and sales, and you know exactly where your money went and how effective it is. And that's the appeal of online advertisement. So for her to say, oh, clicks don't matter, is like, what the hell? And then GM's like, you know what? We pay you a ton of money for our advertising campaign, and they did not convert. We do not want to do business with you anymore. It's completely ineffective. And then, you know, everyone's like, oh, yeah, we're having the same problem too. Then, bam, the stocks tank, you know?
Well, I think she's still with the company, right?
Yeah. I mean, so I guess people came to be content with throwing money, advertising money into Facebook and not seeing results for it. I guess part of it is just the sheer confusion we have with online space. Like, oh, did it not work because we spent money wrong, or did it simply not work? Maybe these certain keywords, maybe these timing, and we didn't hire the right expert. But they never go, oh, the ad's just not effective. And I guess part of it might just be the advertising industry as a whole. Is that, well, like, do you have any other alternatives to try to increase your sales and try to increase your brand name and like notoriety, you know?
Yeah. Well, in other news, of course, the great Warren Buffett and his Berkshire Hathaway increased their shares of Phillips 66. Now, too bad I didn't have money to buy them before that. For those who don't know, the company was a split off of ConocoPhillips, so that it could concentrate on refineries and not to have to worry about all the other stuff like exploration and extraction. So,
is the 66 one a refinery one or the other stuff one?
Phillips 66 is purely refineries. ConocoPhillips is exploration and extraction.
I see. What's the stock symbol? COP?
ConocoPhillips is COP and Phillips is PSX. Or Phillips 66, I'm sorry, is PSX.
I see. Yeah, PSX sounds like it makes sense.
Yeah. Now, Walmart, in an attempt to compete with Amazon Fresh, have partnered up with Uber and Lyft to help deliver groceries. So without actually getting into the online delivery food business, which has actually seen several iterations before and none that have actually been long lasting, it's actually shifted that responsibility to these two companies. And I have to say that I like this move, although I don't think Uber and Lyft drivers will benefit all that much from this, except that, you know, maybe they can earn some money after they've done their own shopping at Walmart.
I imagine, I think I kind of like this idea. I'm not too sure how this is going to work, but maybe like a Walmart might ping them, or it really depends on how these tech companies integrate these solutions. Yeah. Like, well, how do you make it more efficient to get products delivered from Walmart to all these like locations? Maybe they could have like a cash location, like kind of like an Amazon locker of sorts, where Uber drivers can go there and pick up whatever they need for their clients.
No, I think that'll actually complicate things because like you have to have a system where like either that person or a designated driver of theirs will come in, and I think that complicates it a bit more. But like if you're talking about delivering items, because I mean, like I don't know how this is going to be different, right? So as far as I know, the way Uber and Lyft work is they're like, oh hey, someone needs a ride from this location, and these are the people according to their GPS coordinates. You guys are closest, so why don't you come pick them up and, you know, whatever.
Well, let's assume that an Uber driver gets paid minimum wage, which may be somewhere between $10 to $15 now.
Or less, really.
So for them to wait in line to grab something, for it to make sense, is that they need to be compensated the minimum wage for their time, right? The
Yeah.
service fee would be insane. So I mean, Walmart will have to figure out a way to reduce this dramatically so that
Right.
there's not so much of a wait. And the only way I could think of that they can actually do this is have some sort of like geo proximity cache, kind of like how Amazon might have Amazon lockers to do these things. And in fact, I think there might be industry that's like surfacing right now is where they have these services that help you sell things online. And
Right.
I don't know. Maybe there's like a if anything, maybe Walmart will have these mini stores or partnerships with other like stores closer to certain regions to just pick up inventory from them. I don't know.
I mean, they're still working on that, but that's
Yeah.
beside the point right now. I mean,
Mhm.
they're using Uber and Lyft drivers to deliver. I mean, they didn't mention any of the other products. They only said specifically that it was going to compete with Amazon Fresh specifically. So it's only groceries. Now, I mean, if you look at other companies that have done this before, like Safeway, basically the big major supermarket chains in this country,
Mhm.
they've all done it before, and it's all failed. And now, I mean, don't get me wrong, they still have these services,
Mhm.
but it's nowhere the bubble that it was during the tech bubble in like the 2000s, where everyone thought it was going to be the future. That's not the case. They only preserve these features specifically for people that are, say, disabled. And so it's like, it's not like you can just have people just deliver your groceries anymore. So this will be interesting to see if it's actually profitable.
Well, I mean, there's like a lot of paradigms that have to implement to make it profitable. Otherwise, it probably just wouldn't be.
I mean, regardless, I mean, Walmart is not the one having to worry about whether or not this system is profitable or not. They're just saying like, hey, I'm partnering with you guys to do this.
Mhm.
You guys are doing the delivery. Whether or not it's profitable for you guys, that's your issue, right?
Maybe. I mean, I'm just curious what incentive that they have to operate on that. And then I think Amazon has the funds to basically take the risk of, they could experiment with a lot of different paradigms, and they might just have enough. Like, they have Amazon lockers throughout the place. It wouldn't be too hard for them to say, hey, let's allocate a few lockers for these groceries, and then have like some of our delivery people just pick it up from there.
Well, how's Amazon doing it right now? I mean, as far as I know, I mean, aside from contracting out their deliveries to, USPS, UPS, and FedEx, and all these other, these companies like that, like now they're starting to get into their own delivery. I mean, you see a lot of these Amazon vans all over the place.
There's a lot of different paradigms involved. For one, Amazon now does, like, they have warehouses where they hold merchants' inventory for them.
But
and
I mean, that's
warehouses,
basically the Walmart stores themselves. They're holding the inventory at these stores.
Yeah, but that's one aspect of it. Like, there's the delivery from merchants directly to the consumer. There's the Amazon warehouses, and finally there's Amazon lockers. So there's a lot of locations, random locations across the city where they just have lockers for people to pick up their stuff in. For example, at 7-Eleven nearby, you have an Amazon locker inside.
Well, I mean, not all of them do, and even then, at least the ones in my area are. I mean, they're always filled. You can't ever get really anything delivered over there. So,
well, who knows? I'm just saying that they have a lot of leeway and like things that they could do. I mean, they have their Jerome program. Maybe they have something similar. Who knows? Maybe Amazon starts acquiring like supermarkets. I don't know.
Maybe, but I mean, regardless, I mean, I just think it's really interesting where, as far as just specifically delivery goes, Amazon is going from outsourcing their delivery methods to kind of doing it in-house, as opposed to Walmart, which never had the service and is now starting out delivering these things specifically by or just groceries, at least, by using these services. So it's we'll see how it goes, I guess.
Yeah, we'll have to wait and see, because everything's still way too up in the air, right?
Yeah. All right, so there's a thing called the supercharger, which is intended to charge your Tesla car for long-range driving, and normally comes with your Tesla, which means it's built into the cost that you pay for the car. However, with the Model 3, that will not be the case, so that it makes the car's price cheaper. Now, they've they've already faced production delays with their newer models and have had to deal with other quality control issues such as the autopilot feature being affected by moths and such. Now, this is actually really interesting in that basically they're saying like, yeah, you can buy our electric cars, but it's not going to come with that electric charger now.
Should have read the fine print before you gave us the money for the new car.
Yeah. So it's very, very interesting.
I'm like, who would buy an electric car without a charger? That makes no sense. I'm just kidding. I mean, I'm sure there's a charger. It's just not a supercharger.
Probably, yeah. So maybe it's like, hey, well, your car now just comes with a stupid cord to plug in your regular outlet.
As long as your car is connected to your outlet, it will run just fine.
Probably.
So how am I supposed to get from point A to point B? A very, very long cord.
Yes. And finally, there's a list out there of American clients that use Mossack Fonseca's services. Now, this is a law firm that got hacked and, unfortunately, leaked out what we now know as the Panama Papers. You can review our previous episode on that. Now, previously, the Americans were noticeably missing, and we thought that it's because in the U.S., there's already enough ways to hide from taxes with the way the U.S. is set up, and the different banking regulations within the states differ and kind of obfuscate things. That bit was the only thing countering the rumors that the Panama Papers leaks were a CIA hack. Not sure if that's really the case, but the release of the Americans using the services of Mossack Fonseca now being leaked means hiding taxes within the U.S. apparently is just for the small fish. It's time to move up to the big leagues and hide our money internationally.
That's how Google does it.
Yeah.
I mean, apparently Google only pays 2% for taxes. 30-50% is for chumps.
Now, do you actually believe that this is a CIA hack? I mean, it's ridiculous, personally, but...
No, I don't know, man. The world is too convoluted for me to spend too much time dwelling on conspiracy theories. But I just think maybe it's just got leaked, somehow. Right. Not sure the CIA is involved, but I don't see how it's in their best interest to be involved in the first place.
They said that the CIA was involved because, oh, look, there weren't any Americans. Obviously, the CIA did this, and they hid all the American clients' information. But, I mean, the stuff is out now, so that negates that one.
And perhaps maybe it's too complicated and too smart for some to even consider. It's like, what? We didn't even think to hide money there. Fuck me.
Yeah.
We were the Cayman Islands, we were Morocco, we were hiding it in the fucking Swiss. I didn't know there was someplace so close to home.
The Virgin Islands? Jeez.
Panama, fuck.
All right. So, now, considering how a lot of Silicon Valley companies have bled into San Francisco, making California's Bay Area into the tech startup scene, what happens when this tech bubble goes burst? Now, that means you're going to have a bunch of people unemployed using government services. And more recently, when the financial markets were pretty much crashing in 2008, police services were shut and many government services were drastically reduced. Plus, the fact that you've heavily relied on one sector of the economy means you're not diversified. So what's the city to do? Well, San Francisco is looking into stress tests and stashing away cash to prepare for this downfall, but no specific details have been given on how to achieve that. Back in April, Moody's conducted its own tests and found that California wouldn't be able to ride out another economic downturn because it relies heavily on income taxes for revenue that will stop once people are out of work. However, they said Texas will come out just fine because they rely on property taxes for the state's revenue. Although if people lose their jobs and can't afford their mortgage payments, I'm not sure how much of a difference that makes.
See, the thing that you don't understand is Texas is owned by the oil tycoons. So basically, it's just one property paying property taxes, and they have so much oil that paying their property taxes won't be a problem. See, unemployment would be a problem because then it's count on the sheer number of people being unemployed. But as long as that one person is employed in Texas, Texas will do just fine. I'm just kidding. But just think about it this way. Texas is known for its oil exports. So, like, a lot of the land that's held there is by, like, oil owners and oil property, people who work for oil. And then the sheer amount of land you can own is pretty cheap, too. I don't think it's as densely packed as all of California. And
no, definitely not.
So yeah, I mean, maybe they don't even need as much maintenance and infrastructure as we do.
Well, no, they're building quite a bit actually. When I was there, at this point, last year, 2 years ago, 2 years ago, I think. Yeah, they had a lot of construction going on. Things over there are a lot more sprawled out than even here actually.
Yeah.
I mean, things here are quite dense, but like over there, it's sprawled out, but there's a lot more space.
Well, sprout out, it does mean a lot of space.
Well, yeah, but no, I mean, like LA, like in comparison to other cities, is a very sprawled out city.
Mm-hmm.
But at the same time, considering the population density, like it's still very much very crowded. Over there, however, there isn't as much of a population density, and so it's a lot more spacious.
Maybe I'll consider buying an acre of forest land if they have any, just living on it.
Maybe, but I mean, over there, Austin is a very big tech scene.
Yeah, I'm just not sure. I'm a big fan of the drought-ridden areas, but if there's like a giant forest, I can.
Well, California has been in a drought for like how long now?
Way too long.
We live in an entire state that is in fear of a drought and has been for like over a decade.
See, it's because you're too used to the drought-ridden lands. You don't understand what a water-rich land looks like.
You're the one saying you're not going to want to live in a drought-ridden place.
Exactly. I'm saying that because, well, what if I want to grow my own food? At least I get to chop down some trees and like plant it. I know there's enough moisture and water to actually grow it. But if I live in a drought-ridden land, I'm like, well, it's a freaking desert. There's just sand all around me. I better drive like the next 14 miles to the nearest town to get some groceries and shit. It just doesn't sound very sustainable. And then if it's not very sustainable, what's the purpose of having all this land? I might as well live in a city where I'm like a stone's throw away from the closest supermarket. Don't know.
Yeah, I don't know. Anyways, now aside from Houston, there were several other cities that were seen that will see the least impact during recessions. Now, if you want to actually look at another report, not done by Moody's, but another group, to actually see why it is places like Houston and some of these other cities are actually going to come out on top, unless you're willing to wait for future articles and references towards this towards these studies. This article right here will provide you a direct link to the report done by another group, and you can actually order it if you so choose. So now unemployment claims have been dropping again, so the month of May might have actually been a fluke, since last time we were talking about how things were looking really bad and it caused the feds to delay their rate hikes.
Well, so. They definitely they had to sit and watch, really. But
yeah.
Unlike regular people, they really are in no rush to do anything.
Yeah. And oil is rising, and many calls were bought to expire next year. So investors expect there to be a real crunch in oil soon.
Great.
So, I mean, what about Iran coming online for production?
They're still trying to figure that out. I mean, this is like, oh yeah, it's great news, right? Good news? Question mark? Maybe. Yeah, we will have to watch and see how long this news can hold. The minute Iran comes online, they're like, hey, you know what? And in fact, the OPEC negotiations all failed, so
right.
We don't really know where things are gonna go. I mean, yeah, who knows?
Although it's funny how, like, previously oil rallies were like, oh yeah, oil rallies, that's a good thing, oil coming back up, and now people were like, oh no, oil's gonna come back up.
Well, oil's gonna come. Well, it's like,
yeah, but I mean, now it's sending the markets in a panic, and we'll talk about that in a bit. But still, I mean, like, come on, oil rising, good or bad? Make your mind.
I would say it's oil rising is good for a lot of financial companies that have basically made loans to these like companies. The book value just dropped like way down. So then the ability for them to be worth as much as the loan has gone away, But then for the oil price to go back up, then yeah, it makes the financial firms more secure. Sucks for a regular consumer though. Our disposable income goes way down.
Yeah, well. Let's take a look at the week in review. And things were kind of good until Thursday, and then things started to drop. But then they really dropped on Friday. So, yeah. International markets. Australia is closed. That bad figure right there, that was last Friday.
Mm-hmm.
Now, they closed on the news of a stronger U.S. dollar and weak commodities. So, let's take a look at New Zealand, which wasn't looking good either. I mean, look at that chart. They're trying. Now I'm trying to look for specific news on the New Zealand stock market to find out what is going on with that particular country, but I couldn't find anything. So, thus far, Japan's stock exchange fell the most in the entire Asia Pacific region, almost 3%. And this is because the Japanese yen had skyrocketed, causing their stocks to fall. And this comes back to the issue with the people investing in the yen, bringing it much higher, but then, of course, ruining the plan of Abenomics and all that stuff. So, yeah. Taking a look at the Korean Kospi, not good either. But not falling as bad as the Japanese stock market, so there's that. Then there's the Shanghai stock composite. The stocks open much, much lower, but strangely they're climbing back up, although they have a while before getting back into the black. And I doubt they're going to be able to do that by the end of the day. Now, despite that fact, the Morgan Stanley Capital Index, or MSCI, is considering including certain Chinese stocks as part of their indexes. The announcement will come on Tuesday for the final decision.
I'm personally not a big fan of any type of stock that doesn't abide by the SEC's rules and GAAP accounting practices. So I'm just saying, like, just because we got the Sarbanes-Oxley introduced a concept called GAAP. It's a general accounting, accredited accounting principles.
Yeah.
So it basically is like a standardized rule that all companies have to follow so that the numbers are more transparent. And this came about because of Enron.
Right.
Enron was notorious for like using. There's an accounting company called Anderson, and then basically was able to manipulate the numbers to look really, really good, but then the underlying company was complete crap. And this introduced the Sarbanes-Oxley Act to basically prevent fraud in accounting practices. So if a company doesn't abide by that, I'm extremely concerned whether or not their numbers that are reporting are credible or not.
Yeah, there's that. But I mean, regardless, the inclusion is really just to, as far as I know, it's just merely to get a little bit more of an accurate picture of like certain indexes, like so say like ones that concentrate specifically on China or ones that concentrate on like the world at large. It's just to get a more accurate picture of the stock performances on average around the world, supposedly. But hey, whatever.
Who knows? I mean, there's always these ETFs that are tied to these indexes. So
now, despite the market issues, Shanghai's Pudong International Airport was the scene of an explosion at one of the check-in counters. Lone wolf terrorist attack. So, I mean, that may also have affected markets. Not sure. But I think the market issues that we had just mentioned, I think those are the more important ones. But this may play a bit into a factor.
Why would anyone attack China?
There's a lot of people who are just angry with the government right now.
I see.
Now, domestically over there, they're going to say it's probably some person from Hong Kong or, one of the Uyghurs out west that are trying to fight for their independence.
Maybe like Taiwan, Japan is part of Japanese.
Yeah, because Japan has always been one of the holiest areas of China, right?
Yep.
Come on. Oh, geez. Okay, joking aside, let's move along. Taiwanese stocks. The TSEC, not doing good either, but not as bad as Japan. That's the only thing I can really say is no one's doing it as bad as Japan. Hong Kong's Hang Seng Index Once again, not doing as bad as Japan, but not too far behind. It's actually fallen 2.4% last we checked. So, and that would, I mean, last I checked was probably about an hour ago. So, yeah. Let's take a look at the playbook. Oops, wait. Just a reminder, none of this should be misconstrued as financial investment advice. This is merely provided for documentation only. I still got my positions in Konica and Phillips, Disney, Dunkin' Donuts, and Square, and haven't really seen much. I mean, I know Square's down at this point. Dunkin' Donuts, I haven't really checked their performance lately, and Disney. Have you seen anything new with Disney's performance?
No, but I think come a week from now is when the new Disneyland is going to open. So I think this is what, everything's coming into fruition, and this is like and basically result of a $5 billion investment that Disney has made in China. And Disney's, I think they're just starting to set roots in China, and if they're able to execute on that, I would be pretty amazed. It's a huge market. They could tap into it, and amazing. It's gonna be great. The new Disneyland that's opening is movie themed, so they're gonna have like rides like for the Incredible Hulk and Tron and all these other things that is completely different from the typical Disneyland theme park. So I'm kind of looking forward to it, just because I feel like the olden age of like people being aware of who like Donald Duck, Pluto, Mickey Mouse are is kind of slowly fading away.
Not exactly.
You think so?
No, I mean that's still a very popular brand. I mean, granted, yeah, the more and more kids are going to know, of course, about the cartoons that Disney releases. Yes, for sure. But if you're talking about the brand of Mickey Mouse itself, that's still pretty big.
I guess.
That's exactly why. That's exactly why the U.S. has changed their copyright laws, is to protect these brands and their copyrights, so that we can then basically make money off of it. And in this case, this is exactly what Disney is doing. Mm-hmm. They're making money off of the Disney brand, in particular, Mickey Mouse being one of them.
Yeah, but what about Donald Duck and all these other places? These other characters today, does the younger generation even know like what they are?
Yeah, of course they do. I mean, like they may not know. If you say, Mickey Mouse is probably one of the more famous one. If you said Donald Duck, they'd be like, who? But if you go up and you're like, hey, Tang Lao Ya, they're like, oh yeah, Tang Lao Ya, he's so funny.
Yeah, I think so. Well, I guess then my investment is secure.
Well, I mean, are you back in the black with Disney yet, or no?
No, I think once it hits 105, I should be okay.
Okay.
I think I bought another round, so it's like 103. It's kind of a little bit complicated because I have multiple accounts buying into it.
So on another position I have, McDonald's, the Poor Man's Social Network is what it's being called now. Apparently, people gather at McDonald's either for social events or just to avoid their homeless shelters, because people seem normal, according to this article from The Guardian. Like, they're talking about how people were like having weddings at McDonald's.
What?
No, I'm serious.
Sure, it seems awfully ratchet, but...
Well, I mean, I guess to people who were like, too rich to, do something like that. But I guess like McDonald's is a place where people like come together. That whole joke about how like, what was it with that Dave Chappelle skit, the McDonald's parody? He was like, whatever this restaurant is like, hey, it's giving me a chance to serve my community, and blah blah blah. Like, in a certain aspect, I mean, yeah, McDonald's kind of has that role, just because like, I don't know. I mean, like the food is cheap, they have free Wi-Fi, so you can actually connect to the internet. Yeah, a lot of poor people go to McDonald's, man.
I understand. It's just that even the poorest, the lowest of our social spectrum or socioeconomic spectrum is the Hispanics and Latinos and whatever in our area, and even they rent out a little place for the quinceañeras, which is like the 15th birthday celebration.
Yeah,
it's kind of weird to imagine that they might throw a quinceañera at a McDonald's.
Dude, McDonald's totally needs to advertise that, man.
I know. Throw your next social engagement here. We have music. We have playpins. We have Wi-Fi.
Ball pit. Come on.
Ball pins.
Ball pit.
Ball pits.
Anyways, but hey, that's just according to The Guardian. So I guess all the better for my stocks. But I mean, regardless, I mean, still interesting.
McDonald's is still a very solid company, without doubt.
Now the problem with the PRC's economy is that it needs to transition into a consumption economy from a manufacturing one, but that also means that they need to continue to grow economically. This means banking policy by the central government will have to be extremely effective in combating the issues facing their economy and resolving the debt issue. But the problem with that is the credit growth. That growth needs to be sustained. And granted, the analyst at Bloomberg said that the PRC won't come to a crash in the sense that GDP will go down like to the negative rates, and that the currency play they tried ended up in failure, which they hopefully will have learned their lesson from. So on the currency front, it's more of a matter of what the U.S. will do from here on forth. So looking at this, I think there still might be some things left to worry about with China. So considering considering all this, I still have my doubts about the transition itself. I started looking at the different ways you can bet against China. So here's a 2014 article which actually lists 5 possibilities of things to buy in or bet against if such a scenario were to happen. So Australian banks is one of them, because China has a lot of business in Australia. A lot of Australian banks are actually funding a lot of the Chinese businesses coming into Australia to do business and for like their mining operations especially. That's a big one. So in relations to that, the Fortescue Metals, that's a company that's heavily funded by the Chinese, just specifically because the Chinese are trying to extract metals from Australia. Of course, there's the Australian dollar, and then China property developers. You can do a put on those or short those guys, and to short the Chinese yuan. But that's a little bit harder, so I'll get into that in a bit. Now, here's another article that I introduced before, but it's worth taking another look. So there are 5 ETFs that you might want to invest in, just in case the China crash actually does happen. And these are ETFs that are specifically geared towards, like a China bear situation. Now, if you're looking to play against China's currency, it's a bit harder because they have an onshore currency market as well as an offshore. The onshore market is exclusively controlled within a tight band run by the People's Bank of China, while the offshore account is more freely traded. But they may not necessarily correlate with each other. So, like, even though you're trading the yuan overseas, and maybe overseas, like the yuan is probably used as a sort of international currency, but this is mainly really in African countries, really. Hence, some people don't try to go with this because, like I said, they don't correlate. So what they try to do is they go for the second round effects. This is where the currencies of other countries that would also be affected by fluctuations in the PRC, such as the Korean won, Malaysian currency, and new Taiwanese dollar. Like if you short these, that would probably be just the same. Although on a side note, you'll now be able to directly trade offshore RMB in London and New York. So,
great.
Of course, if China fails, you'll see a worldwide ripple. But with the recent talks, no one is as confident as they were before about this happening. So what if there was something else that triggered instability elsewhere, like the issue with Greece not being able to recover its economy and thus leading to a break of the EU? I mean, that however, is more just the fears of the former Greek finance minister, but still.
I would say that no one really expects Greece to recover, especially not with the extremely horrible austerity plan that's been laid out to them. I mean, in fact, it's kind of like in servitude or...
Actually, that's kind of what the Greek finance minister, the former Greek finance minister said, yeah.
Yeah, pretty much.
He noted, he was like, look, if China fails, like that's one thing. Yeah. But like China went from a small economy to like a really big one in a short time. And basically Greece has to catch up to what they've done.
Yeah, pump a ton of people.
But Greece doesn't have the space, doesn't have the population to be that manufacturing powerhouse that China is.
Yep.
So I don't know, man.
All wars have always been fought over resources. So
yeah.
I don't know where things are going for them, but I mean, if I was Greece, I'd probably entertain an exit, just because the current current euro situation is not working out for them at all.
Yeah, but I mean, if that happens, I mean, if they exit, I mean,
well, let's say this: after you've hit rock bottom, there's no further to fall, and Greece might be there. They only have ups from here on out.
Yeah, well, I think there might be a new bottom for them to set. Anyways. Now, the more likely scenarios before that actually happens, not saying that there's no possibility of that happening. It might, but in the more near term, China, which although looking bad, isn't as bad as we thought for now. Business investments like spending on equipment and R&D being lowered, and U.S. politics are more things that we should be worried about. Although Hillary Clinton and Trump are very much business friendly, and they're in Wall Street's pockets. So,
yep.
So that's not as big of a deal, I suppose. So, one major indicator of a recession to look at is the unemployment rate, and if you compare 1 month's unemployment rate to the year prior, that's usually a good indicator. Now, thus far, there is no such similar case. So, in other words, if the unemployment rate for this month is higher than the year prior, that's usually a good indicator that a recession is coming within a month.
I don't know. Like, recessions and depressions aren't quite defined in that way. It's like the definition of recession and depression is defined by GDP growth.
Right. Yeah.
So really, that's the key metric to look at.
That is a key metric. But usually, I mean, like the unemployment rate, like if the unemployment rate, it should not be ignored either.
Well, because it's 4 periods of consecutive like lack of growth or something.
I'm not talking about recession versus depression. I'm talking about whether or not a recession is actually going to happen.
Yeah, I think it's really hard to predict if whether or not a recession is going to happen. It says if you have 4 consecutive periods, so one of these periods are not like growth shrinkage, then or lack of growth, then you basically don't have a recession. It's pretty challenging to be in a recession in a way. If anything, we're currently more or less in a normative state. And if anything, even China right now, it's not that they're not growing, it's just that they're not growing at a fast rate that they were before.
Right, yeah.
Yeah, I don't know. I'd be surprised if a single month of unemployment can kick the entire economy into a recession. That would be surprising for me. Of course, then again...
No. The correlation is between is not between, like, say, like, May and June, right? But the correlation is between June versus June of last year. Something like that.
I don't know. That's even more surprising. I mean, if they said, like, 4 consecutive periods as defined as, like, 4 quarters, therefore a year, and then this is not an indicator for a depression. This is an indicator for a recession, the start of a recession. I think a recession is just lack of growth, and depression is reverse growth.
Right, but if you have more people applying for unemployment, right, more people are getting laid off, that means companies are saying, we are not going to make as much and we cannot afford to pay you, off you go, right?
It's so well, I don't know if that can be a easy metric either, just because unemployment is a factor. Like, for example, if you decide to stop looking for work, you are no longer unemployed.
Right.
Yeah, if you've given up on job searching, then you are no longer unemployed. So the employment rate will go down.
They are not counting these people at all in this in this evaluation. And I mean, if you're talking about that, then yeah, America's unemployment numbers are going to be a lot higher if you want to include these people in
there. Sometimes the unemployment rate goes up, and they say, well, the explanation for why it went up was because a lot of disillusioned job seekers are now back on the market looking for things. So in that case, the unemployment rate going up might not be a bad thing either. Like that's why, like, with the whole recession thing, GDP is a more simple to understand metric as opposed to unemployment rate, because unemployment rate can be interpreted a few different ways, just because there are 2 different ways to account for unemployment rate, and one of them which basically involves if you basically stop searching for work altogether, then you're no longer unemployed.
Okay.
That makes it very complicated to use. Yeah.
All right, so let's take a look at the week ahead. Monday, not very much to look at. Tuesday, you have the FOMC meeting beginning. You have the Small Business Optimism Index, retail sales numbers, import and export prices. Wednesday, you have the Empire State Manufacturing Survey, industrial production, FOMC meeting announcement and forecast, Fed Chair press conference, and the Treasury International Capital report. Thursday, you have the Consumer Price Index, jobless claims, Philadelphia Fed Business Outlook Survey, and the Bloomberg Consumer Comfort Index, Fed balance sheet numbers, and money supply report. And Friday, you have the Atlanta Fed Business Inflation expectations. So quite a lot to look forward to next week.
Nice.
And let's move on to recommendations. Now, last week, I recommended the American Association of Independent Investors reports. And while it's a good resource, you still have to pay for full access. So I mean, it's still worth a look to see what they do provide for free. But this week, I'm bringing a recommendation for the Economic Forecasting Survey, where the Wall Street Journal gathers the predictions of leading economists on predictions of various numbers. What we have here is their odds of a recession. Now, notice how things shot up in February, and this month, that possibility is edging higher. But on top of that, they also compare economist estimates with actual data for the past and show you economists' predictions in certain areas. Other estimates include the GDP, CPI, oil prices, unemployment, federal fund rates, home prices, and other things. So
nice.
Yeah. So I think that's pretty much it. Thank you everybody for listening. Just a reminder, we may have ownership or decisions in the stocks mentioned in the show.